Well, ladies and gentlemen, good morning, everybody. On behalf of GL Del Rio, we would like you to give you a warm welcome to this webinar session that we have prepared for all of our clients, for all of our friends, in which we will provide and explain the most updated information related to a new electronic invoice, specifically for foreign trade operations that the government is now implementing here in Mexico. This electronic invoices is well known in Mexico as with the acronym of CFDI. My name is Leonardo Games, and I'm tax manager here in GL Del Rio Monterrey office. And here with me as well is my colleague Jose Jimenez, who will also help me on this presentation.
Thank you, Leo, and good morning, everyone. I will be here working with Leo, explaining this new CFDI that he has mentioned, and that will regulate these new foreign trade operations. And I hope this presentation will be helpful for you and your company. Thank you very much for your time, and let's begin.
So in general terms, let me explain how the methodology of the session will work. During all the presentation, we will make our comments, we will provide this presentation. At the end of it, you will receive this material for you, so you can have it available at all times. Feel free to submit your questions. On the right side of the screen, there is a panel using your keyboard. Feel free to make your questions over there. We will not read the questions during the presentation, but at the end of the presentation, which will be 15 minutes, we will leave the final 10 minutes for a Q&A session in which we will try to cover all the questions that you made. In case that if we do not have enough time to reply them all, please be sure that we will answer them all by email during the following days. So with that being said, let's work on the presentation that we will have. First of all, I wanted to show you the agenda that we will be having for today's session. First, we will start with the objective. What will be our goal during this presentation? We will explain a little bit about definitions, background information, where does this come from, why is the government applying it right now and make it mandatory for taxpayers in Mexico. Some considerations. We will review as well some of the mandatory and some of the optional requirements that this new electronic invoice for foreign trade operations will require. We will as well review some of the examples and how these new invoices will look like for those foreign trade operations. As well, we will review some of the penalties and fines that taxpayers could be subject in case they do not comply with these new electronic invoices. We will review as well some part of conclusions, and we will review and have a part of Q&A at the end of it. So, starting with the objective of our presentation, pretty much what we will try to focus on is to explain what is a new CFDI and electronic invoices for foreign trade operations. We will explain the background of it and the reasons of the government behind everything to establishing as mandatory according to regular tax regulations. We will analyze as well the requirements issued by the government to elaborate and to comply with everything that the government requested. We will explain what operations are subject to issuance of this new electronic invoice, because even though there is this new regulation for foreign trade operations, it's important to mention that not all the operations will be subject to this new electronic invoice. Only a few ones that we will explain in a little bit moment. We'll explain as well when this regulation will become mandatory and what can be the consequences of not complying with it. Moving on to the introductions and definitions, I wanted to show a slide that will be the basis of our consideration. This slide explains what is a definition of an electronic invoice complement But before we start with the explanation of what is a complement of this electronic invoice, I want to explain first what is known as an electronic invoice. In Mexico, it is well known as CFDI. You may recall that a couple of years ago, Mexico established as mandatory to start issuing invoices on an electronic way. These electronic invoices are well known in Mexico as CFDI for its corresponding acronym. So this means that in the past you used to make your invoices on a regular basis, like typing them on handwriting. However, Mexico is starting to move on to a new era of digital invoices. For that reason, they created the CFDI.
Yeah, this is to avoid to use paper, right? It's like moving everything to electronic and digital.
Correct.
Documents.
Correct. So the CFDI or electronic invoice, that is like the most common document to encrypt invoices or to encrypt digital information. However, a complement, it is now we can review this slide. A complement, it is a specific label that will be included in any CFDI or electronic invoice that will allow you to include a specific and additional useful information for a specific activity or sector. This will allow the invoice to be protected by the electronic chains and everything related to to electronic invoices.
And another very important thing is with this complement, the income tax authorities will have looking these kind of sensitive transactions that the company could carry out, or tax regimes that are different for a normal tax contribution. So this is the main reason to use this CFDI complement.
Right. In the next slide, you will see that nowadays Mexico, besides having a regular CFDI or electronic invoice, it has as well complements. Those complements, the one that we will be looking at during this presentation, is highlighted in red color. It's for the foreign trade operations. However, to set an example of what would be a complement or additional information that your electronic invoice needs to contain, we will explain a little bit more. For example, the one that says payroll slips or receipts. Here in Mexico, a couple of years ago, it was established that when an employer pays salaries to its employees, the employer must submit as well an electronic invoice to its employees. But it requires that electronic invoice, that CFDI, to include additional information related to payroll, such as the name of the employee, your tax ID of the employee, the social security of your employee, as well some other additional information that needs to contain for specific sectors or activities. In this case, those were for payrolls. However, the other example that we have as a good complement, it's like the ones for school and college receipts. For example, in Mexico, when you are paying for the college or the schools in Mexico, the schools are obligated to issue an electronic invoice to you. However, that electronic invoice will contain basic information such as the name of the client, in the tax ID of you, the date, the description of the goods, etc. However, there is a complement specific for schools, which establishes that the school needs to include in the electronic invoice certain information, a specific information. In this case, for schools, we are talking about the name of the student, the tax ID of the student, the grade in which the student is taking, etc. So that puts examples of what is a complement. So besides an electronic invoice, a complement provides additional information for specific sectors.
I would like to add a comment here. For example, if we can see these complements a payroll slip, or it's also a deduction for taxpayers. So what we are seeing now is that the government is trying to move everything to electronic invoices. So that is why it's making this obligation to taxpayers to, even they are paying payroll slips, we need to issue this new complement with this invoice. So this is like, at the end, what it looks like everything will end in a electronic invoice for all the operations. So as a part of the background, I would like to mention what are the provisions mandatory to apply this new electronic invoice for foreign trade operations. First of all, we have the custom law. The Article 36 and 36A of the custom law establish the requirements to elaborate a custom declaration. A custom declaration here in Mexico, it is also known as a pedimento. So when we refer to a pedimento further in this presentation, we are referring to a custom declaration. So in order to be able to introduce or extract goods to Mexico, we need these pedimentos, right? So this is the first provision applicable. Additionally, there is a requirement to include electronic documentation as an exhibit of the pedimento. For example, certificate of origin, freight commercial, invoice, etc. As we have mentioned before, the exhibit of the pedimento will include some electronic documentation. But since 2016, there was a new requirement in the Rule 3.135 of the General Rules for Foreign Trade. This new rule specified that in accordance with the article of the custom law that we have mentioned before, when a definitive exportation under the Code 8.1, this Code 8.1 is used only for a definitive exportation in a pedimento, we will need to write down in the pedimento the electronic invoice number. This is like the new rule that will make us to generate this new electronic invoice, because now in this new provision, it is mentioned that we need to write down in this pedimento electronic invoice number, that before this new rule was published, that was not this requirement. Finally, as this new rule was published, there was another rule published, that is the Rule 2.71.22 of the General Tax Rule of 2016. And basically, in this rule is where is established the provision to submit this new electronic invoice for foreign trade operation. So after this publication, the income tax authorities, through their website, they publish how we have to make the requirements to accomplish the establishment of the rule of the General Tax Rule of 2016. So according with this, the Mexican tax authorities now have regulated this new complement that will be used for invoicing the electronic. After this new issue, the government begins to prepare a pilot test. This pilot test, the purpose was to start implementation of the new electronic invoice for foreign trade transaction, as well as their complement. The period of this pilot test was performed from November 2015 to January 2016.
Yeah, and Jose, the reason of this pilot test was because the government wanted to start to make to see how this new electronic invoice that they are requesting for foreign trade operation, if it would be viable to make it happen, if it was possible to make it happen for taxpayers, for authorized certification providers, even for customs, if the customs were prepared to receive this information that they are requesting. That is the reason why the government is starting to make a few tests and take a few companies to start testing how this new electronic invoice would work.
Yeah, and the income tax authority will try to prove the feasibility of perform this new electronic invoice. So as a result of this pilot test, authorities identified that the feasibility to link this information was helpful, especially when the Mexican tax authorities will confirm that the tax ID and name of the importer written down in the electronic invoice for foreign trade operation is the same that the one that the IRS had is in records. So under this, we have like the match that the government is making with, in this case, with the customs of US, because making these pilot test results, the government realized that 87% of the exportation performed in this pilot test were done with the US. So the government shared this information with the US government, and the US government thought that it was very helpful because they can track all this kind of between these two countries. As a part of background of this new CFDI or electronic invoice, this was like the 6 important things that were take part on the pilot text. The first one was the use of electronic invoice for definitive exportation 8.1 code. The second one that I was mentioning is the use of the tax ID reference of the client. That is the one that the government will match with the IRS, and they will validate this new this tax ID with the client. The focusing of this pilot test is to prove transparency and traceability on foreign trade transactions. And using of electronic signature, we provide certainty about the identity of the exported that use the invoice. This in Mexico, applicable in Mexico. Also linking of the invoice information and export documents, which implies simplification and coherence in the area of international taxation and foreign trade.
Yes, because at the end of the day, one of the main reasons of the government to implement this new electronic invoice is to allow the authorities, and when we are talking about authorities, we're talking about both sides, the importer and the exporter. So it will allow the authorities to identify the exporter in a faster manner. And just like Jose was mentioning, part of the reasons to implement this new electronic invoice is so the governments could track foreign trade operations, because some taxpayers were simulating transactions abroad, were sending merchandise to non-real companies abroad. So for that reason, they decide to start using and crossing information between the countries. For that reason, Mexico and their tax authorities have established some share of information agreements with North American Free Trade Area, which pretty much concentrates 80% of the country's exportations. So Mexico, for that reason, wants to implement this new electronic invoice. So the operation with the North American countries could be covered and could be more traceable. So this new electronic invoice, who it will applicable to? Well, the new CFDI for foreign trade operation and its corresponding complement will only be applicable to those Mexican taxpayers carrying out, noting here, definitive exportations with Customs Declaration Code A1, according to the General Rules of Foreign Trade for 2016. It's important to mention that nowadays in Mexico, there are various regimes to make foreign trade operations. For example, we have the most common one. It is definitive imports and export, in which the goods are supposed to send abroad or to make the importation so it remains in that country. However, for those maquila companies or maquiladora or IMEX companies, there is another regime, which is a temporary import or exportation, which at the end of the day, the reason of it is to make an import or export without paying the duties, because the merchandise that wanted to be exported or imported will be subject to a treatment. And the reason is not to remain in the other country for forever, but only for a certain period of time. There is another exports regime for transit of merchandises that only comes to Mexico to cross Mexico. So let's put an example that U.S. wants to send some merchandises by truck to a South American country. So the merchandise has to pass through Mexico. Well, that is a specific regime of customs for only transit of merchandises. So the reason of explaining this is because we want to emphasize that this new electronic invoice will only be applicable to those definitive exportation that Mexico made, that taxpayers in Mexico made to foreign residents. Okay, this slide that you are watching right now shows in general terms what is currently needed to make an export out of Mexico. Let me explain a little or dig a little bit deeper in the following slide. Currently, you need 3 things to make an export. Those 3 things are the first one from right to left. There is a CFDI, which is well known as an electronic invoice. That document represents the transfer of the goods that you're selling to your client. Following up, you need to make an export. You need what it's in Mexico called a pro forma invoice. It is pretty much known as a commercial invoice, the one that you use at the border to declare the value of the goods. And then we have the other document, which is it's called COVE for stands in Mexico. However, it's a declaration of the values. At the end, it's a template in which you will fill in some information through an electronic platform. Once you have filled in that information, at the end, when you submit it, you get automatically your pedimento. So those are the 3 main documents that you currently need in order to perform an export abroad. So what the government wants to do is to gather all that information, or most of the information that is used for those 3 documents, and include it in one only new document, which is the new CFDI for foreign trade operation. The slide that you are watching right now shows the information that the cover requested, for example, the transaction type, the customs declaration code, the Incoterm, the total amount in USD, as well as the information that the pro forma or the commercial invoice requests. You can see that it requests transaction date, payment method, the tax ID of the issuer, the tax ID of the receiver, etc. And on the side of the electronic invoice, you can see that they request your digital stamps. It requests your certificate, your electronic seals, etc. So it's important to mention that even though the government wants to gather all that information and put it in only one new electronic invoice, during these first steps, it could be a duplicity of information that you will need to provide, because that you currently does it in those 3 different documents, but unfortunately at this point the government wants you to include it in a 4th new document, which is the electronic invoice for foreign trade operation. The idea of the government is to eliminate in the future the paper and to have everything together, not in these 3 documents, but only in one, which would be the CFD for foreign trade operations.
Yeah, but we do not know when this will happen. This is like
sure.
Also, this will begin mandatory. We will say that in the forward slide, but this is like we have this question right now: when will this become mandatory? Like to gathering all these 4 documents and just have one, just to help companies and simplify the process.
Okay, the following slide shows, in general terms, a flow of information of how the transaction could work. I wouldn't like to take too much time on this information. In general terms, I can make a summary. So pretty much how it will work is that your client will place you an order. It automatically creates a PO for the Mexican entity. And it determines the Incoterms, the invoice terms, the transportation agreements, and everything. So once that is done, it is very important to have the customs and complementary information integrated for the invoice. And here I put a question mark, because in this part is when we believe this new electronic invoice will request the taxpayer to put some information that he might not have. He might not be an expert on custom matters. For example, it requests information such as your tariff code or item code for custom purposes. And that is more related to a custom broker. So for that reason, we believe at this point, when you're requesting to issue this new electronic invoice, you need to request a system from your custom broker so it could help you to make the filling of this new invoice.
It's important to mention that the issue of this electronic invoice is responsible of the taxpayer, not of the custom brokers. But we consider that we need to work together in order to accomplish this requirement in the correct way. Because as Leo mentioned, it is very complicated that we can know the custom tariff item or the description of the item that we are exporting. So we need that our custom broker help us on this matter. And it's something that we will have to work together in order to send this electronic invoice to the next step.
Right, correct.
So we have this question, and when does this new electronic invoice will become mandatory? There is a transitory article in the 5th modification to the General Rules of 2015 that establishes that will be mandatory as 1st of July of 2016. So we are now just about 1 month to accomplish this new requirement, and we can conclude that we don't know if the providers of this new electronic invoice, that it will be a third party, they are ready. We have been in touch with these certification service providers, and they can confirm that based on the research that they had performed, there are just a few providers that are ready to issue this new electronic invoice. The other ones are still testing this new format. So it's very, very important to get in touch with your provider in order to be if he is ready to submit this new electronic invoice. Well, as Leo was mentioned, we are now continuing with the requirements that this new complement will need to fulfill, that we will need to fulfill. And this new information, it is divided in mandatory and optional requirements. This for the CFDI, the foreign trade operations. The main information is divided in this mandatory information in 3 groups. The first one, you can see, is asking us the tax ID or the tax registration number of the receiver, the address of the recipient of the merchandise. The receiver and the recipient could be the same entity. It's very important to clarify that. And as we have mentioned before, you can see that considering the tax ID number or the taxpayer register will work to share the information with other countries, and it is responsible of this, in this case, the providers, to validate that the tax ID number of the taxpayer exists in the other country. And also the address have to be correct. The second part is the information of the goods, and it asks you the merchandise brand, the part number item, then the identification code assignment by the company, or the serial number, or the exported goods. And of course, the value of the goods that it's always have to be in USD currency. So if we have another currency that we are using for this exportation, we need to exchange the currency to a USD dollar. At the end, there is like the other information mandatory, that is like the version of the complement of the CFDI and the type of foreign trade operation carried out, that in this case would be only for definitive exportations. So this is the point that I was mentioned, that the tax ID or the tax identifier must be provided by the importer or the recipient of the merchandise for the country of destination. For exportation to the USA, the tax ID must be validated by the authorized certificate service provider. That's what I was mentioned. In the case of for exportation for the USA, this tax ID shall be validated by the certification service provider. The income tax authorities here in Mexico has already a database where it has all the tax ID. It's supposed that it has all the tax ID of the US entities. So it will make a match just to see if the tax ID that we are considering in this new electronic invoice match with the one that the IRS in US has. And what they have told us in some meetings that we have is that 20% of tax ID review on this kind of taxations were using more than one company name. So there was mentioned that there were some entities that have one tax ID in US, but they have 3 different names. So this kind of operation, when we have this kind of cases, this certification maybe will give us a mistake, or we will not allow to continue to issue this new invoice. So it's something very important that we have to take in mind. So, talking about the structure that the Mexican tax authorities publish on its website, we can observe that there are 12 catalogs. Reviewing some of these catalogs, we observed that there were 100. For example, we can see here that these 12 catalogs ask you the colony, the locality, community, state, country, zip code, currency, Incoterm, and all the other ones. So this information, it's only for the exporter. And for example, in the case of the colony, there are more than 240 colonies registered. So there is a lot of information there, but it's only for the Mexican entities.
Right, and in here, when Jose refers to a catalog, this means that the government has published some lists that they had released on their webpage, in which you, instead of putting your zip code by entering the number of your zip code, like 66554 or etc., you will need to put a code that the government established, like 01 would be the one that refers to the zip code 66545, right? So for that reasons, we are referring there as catalogs. So when it refers to Incoterms as well, or the currency, you will not need to place precisely the currency of US dollars or Canadian dollars or Mexican pesos, etc. You might need to put only the number of the catalog that refers to that currency.
So there are 250 countries registered in this catalog, and in the case that there is a country that is not specified in this catalog, there is like a specific rule that specifies that we can use a ZZZ just to be able to submit this electronic invoice, just in the case that the country who we are exporting is not in the catalog.
Okay, there is as well the information that Jose just mentioned. It is the mandatory information that you must include in this new electronic invoice. Every time you make an export of goods under a definitive regime. However, you have the alternative of the option to include additional information in case you want to do it. What would be that information? Well, we can divide three main categories as well, which will be information related to the sender, receiver, or recipient of the information, as well the information of the goods and other information. For example, in case the exporter of the goods it's an individual, you can put your unique tax ID, which is a little bit different than your regular tax ID or RFC, well known in Mexico. We call it CURP in Spanish because this is a special tax ID only for individuals. So that is another information that you might need or that it is optional for you to include it in case you have it available. As well, your taxpayer information number in Spanish, name identification number of register of the recipient's country of residence of exported goods, and some specific information such as the full name of recipient's address and optional information such as the house number, apartment number, town, district, references, etc. that was not established as mandatory like the other requirements. When it comes to information of the goods, you can add as optional the quantity, the exchange rate, the unit of measure, the dollar value, the unit value of price of the goods at the customs, and you can include as well some other optional information such as the certificate of origin, the Incoterm, and some other observation that you can put.
Just here, I would like to add, Leo, that even though this is not mandatory information, in the case that the company already has this information, we recommend that we include this information, not
Agree.
to avoid to consider this in this new electronic invoice. So if we have this information, we have to include it.
Agree. There is also it could be the question of what to do in case you don't have it and you do not want to put that information. What would happen? Well, there is still the question in the air if you can leave it in blank or use a non-identified phrase or something. Unfortunately, that is not established currently, so we will need to wait for further instructions about how we might file these in case we don't have the information. Okay, just like I was mentioning, some of the optional information would be the receiver of the goods and the name of the receipt. In this case, we can use the commercial name of the destination of the goods. That is something that will become less optional. As well, we were mentioning that some other of the optional information that you can include in this new electronic invoice is the customs tariff item, which is an 8-digit position number that usually is determined by the custom brokers because there are thousands of item numbers depending on the merchandise that you are exporting. So that is another item that you can include.
And this one have to be provided by your custom broker.
Correct.
It's very, very important to have that in mind.
As well, some other of the information that you can include is the unit of measurement, which in this slide you can see what would be like the most common ones would be like kilo, square meters, item, boxes, tons, dozens, bottles, etc. Those could be some other additional information that we can include. In terms of the certificate of origin, we can as well include what would be the number that you have for that certificate of origin of your merchandise. You can as well include it in the new electronic invoice.
Additionally, we have the catalog of international trade terms, better known as Incoterm, and this like in the catalog we can find all the Incoterms that are recognized by the international trade transactions, and there is just one specific rule that tells you that in the case that we are using more than one Incoterm, we need to add at the end of the addenda of this new electronic invoice we need to type the other Incoterms that we are using in these transactions. This is the field that I was mentioned. That is the field of observation and additional fields. And here we have the observation additional information field where we can include product specification, other commercial information, additional Incoterms, as I was mentioned before, or requirements that the country of destination of the merchandise could request. And here is like what we will see when we will have the printed version of this new electronic invoice. Is basically the same that we have in all the invoices that we are using now for selling or purchasing. Is the same requirements, just that we will have this new complement that would shown us the foreign trades operations that we have mentioned.
Right. Well, now why don't we review some of the examples of information to fill in the complement of the foreign trade operations. For examples, this slide that we are watching has or can be divided in two parts. The part in orange color where it says goods information, and the parts in blue color where it says complementary information. So when we're talking about the first part, when you're filling in your electronic invoice for foreign trade operations, the information that you will include on the orange part will be more related to commercial effects. For example, the merchandise that you are selling, that's the reason why it says what is the amount that you're selling, what is the unit. Your personal ID or item number of that product, a description of the product, in this case is like disc brakes or things like that, your unit value and the amount, the total amount. That would be like the information that the CFDI will contain. However, the blue part, it represents the complement information that will be added to the electronic invoice. In this case, we were referring about the identification number, the customs tariff, the customs unit value, and the dollar value at all times, which we were mentioning that is mandatory to establish everything in USD.
And this identification number that is mentioned here in the complement have to be provided by the seller. This is something that we need to, when we sell this kind of item, we have to assign this identification number for each item.
The following slides shows an example or describes first what would happen if you're going to make an exportation of some merchandise that will be on consignment, meaning that you have not sold it yet. It will be in consignment abroad. In that case, if we go to the next slide, we can see how we should issue that electronic invoice to support the exportation. In that case, when it refers to the CFDI information about the commercial information, if you see there is a cash discount, which is for the same amount for the subtotal. At the end, the total of the merchandise that you are exporting for purposes of this new electronic invoice, it's zero. Because at the end of the day, it is not a sale, like we were mentioning. It is an exportation that you are doing on consignments. And on the complement information, you have to put the information related to the merchandise, like the identification number, the customs tariff, and the dollar value, even though the dollar value might not or will not match with the total value that you use on the orange part, on the information of the electronic invoice.
The other electronic invoice that we are mentioning is the one that we have to use for the exportation of samples and promotions. As we know, these kind of exportations most of the time are given for free to our customers, just to see if our products are well or they work correctly. So for this kind of operation, it is the same as the one that Leo was mentioned, that we will consider the value of this merchandise, but at the end we will cash discount the value of these two merchandise, because at the end this is not it will not be an income for the exporter. He is giving for free this advertisement just to know that the branch of this new transaction. And also, there is another electronic invoice for the shipment of exported products in plastic containers. So this is very used when maquiladoras or IMEX companies exports merchandise. They use container or plastic packages that they need to export and to have a pedimento with a code of A1 and EB. So this electronic invoice told us that when we are making this exportation, we need to consider the value of these packages for $1. As we can see here, there is the value is just $1, and it's multiplied by the amount of items that we are exporting for these concepts. And at the end, it will be the same. We have to cash discount the total amount of this operation because, as we have mentioned before, this is not a sale.
Correct.
This is like the part of the complement. What we are watching now in the slide is a part of the complement where we can identify the foreign trade operation. Here's where we can see that it's a A1 COB operation that is considered as a definitive exportation. Here we have the exchange rate for USD to convert to pesos. This is something that we are very used to watching a pedimento. This is almost the same information that we have there. Just there, here, they are adding the tax ID and the register number at the end of these requirements. Also, there is another rule that telling us that if you are a courier, you are not obligated to accomplish this requirement. For example, FedEx, UPS, these kind of companies who perform this exportation, it is not mandatory to accomplish requirement for these exportations. And this is like how, once that we have finished to prepare all these electronic invoice, we need to send this invoice to validate through SAT. So here we call it the modulator that is in charge to validate the existence of the folio for the invoice in the custom declaration code. So this is basically making the match with the pedimento and this new electronic invoice, just to prove that it is correct and that it exists. And there is a possibility to amend a custom declaration code when a CFDI is canceled. This is something that could happen, like for example, if we issue this electronic invoice and we see that we have some mistakes or the values manifest there are wrong, we can submit an amendment of this CFDI. However, we have to inform this to the custom declaration in order to consider the correct pedimento. In case that this is no longer possible, we have to amend the pedimento too.
So far, we can make a quick summary in here. Based on the examples that we have seen, you can sense that the government wants to have a very tight control over the exportations that Mexican taxpayers is making. That's pretty much the sense. Even though it is a sale, even though it is only that you're exporting samples, even though you're exporting trucks, plastics, everything, you can feel that the government wants to have a very tight control over what is exporting to different countries.
Yeah, it's looking for what is an income and what is not an income for tax purposes.
Correct. That is pretty much the sense of including this new electronic invoice. So, what would be the penalties and fines for not complying start complying when the time comes? Well, the Federal Tax Code established on Article 83 that it is an infraction not to use, deliver, or make available to the clients the digital tax receipts via the Internet for the activities when stated by the tax provision, nor issuing them without complying with their requirements. So that is pretty much the infraction that taxpayer will be subject or will be in that position in case they do not comply with it. What would be the implication of doing so? Well, the government establishes penalties that are applicable to 3 different sections. Most of us will be stuck in general taxpayers because the other 2 penalties or subjects are specific sectors. So most of the taxpayer will fit into the general taxpayers penalty, which the penalty goes from 13,570 pesos to 77,580 pesos. What is the range, or why is there a range from the penalty that goes from one number to another? Well, it depends on the recurrency. If it is the first time that there is an infraction from you, you might get the penalty of the 13,000. However, you keep doing it and so on, then the penalty could go and goes up to 77,000 pesos. So far we have reached the end of our presentation. From a general perspective, the idea of the government to implement this new electronic invoice is to avoid using paper and not use paper anymore. For that reason, everything so far during the couple of years, of the past years, the government has moving on to an electronic era. They want to not use the paper anymore because it is more easy for them to make taxation, to make reviewing of information now that they have everything in their database. So even though at the beginning of this new implementation of electronic invoice, it might be a burden, an administrative burden for the taxpayers, at the end of the day, the government is looking forward to have it done in a faster and in a better way.
And also, I think all this information that the authorities is asking us will end just with one document. That was what Leo was mentioned. They will maybe delete the pedimento, the proforma, the busem, that is like where we are uploading all the freights, certificate of origin, just to have one document that can prove that the exportation was performed correctly and help companies to simplify the process of exportation. But as we can see now, this is not true. Every time it's more complicated. We have now, as Leo mentioned, 4 requirements, but we hope that in the future and or with a new rule or something, we can simplify this process. And another thing that I was thinking is that maybe the income tax authorities will publish a new rule that will give us more time to be able to accomplish this new requirement. But as today, we do not have any new rule that gives us more time to submit this new electronic invoice. But if we have some news, we will send you the information as soon as possible.
Sure. The final part of our presentation is pretty much a Q&A session. We have a few questions in here that we have received. We will proceed to read them and give them answer to the ones that we have with the time available. There is a question in here, Jose. Let me read it, and maybe you can give us the answer for that one.
Okay.
It says, where can we find the structure and guidelines for the complement of foreign trade operations, meaning for this new electronic invoice?
As we have mentioned, this is located in the website of the SAT, that is the Mexican Tax Authorities. It's very easy to access. If you go there and you just browse like new requirements for the electronic invoice for foreign trade operations, you can see all the catalog and all the requirements to submit this new electronic invoice.
Correct.
And I have another question here, Leo, that it's mentioned that does apply the use of this complement to virtual or return operations?
Yeah, thank you. Well, on that question, the answer would be no. In case we were explaining that there are various import or export regimes. One of those regimes, it's the temporary regimes, which are related to virtual pedimentos. When you transfer goods from one country to the same country, to another taxpayer in the same country, but you do not move the merchandise to the border. You only transfer like virtually. That is called a virtual payment. So that is the reason for it. So on those transactions, it is not mandatory that you elaborate a CFDI for foreign trade operations, since this CFDI, as we have mentioned, it's only applicable to definitive exportations. There is another question in here, Jose. It says it is related to the Incoterms. What happens if you have two or more Incoterms in your invoice?
Okay, as I was mentioned before, there is a part in this complement of the electronic invoice that is called like other information or addenda. There you can specify all the Incoterms that you use to perform this exportation, so you can put there the other Incoterms that you are using for this transaction, in the case that you have more than one.
Yes, definitely, I agree.
Okay. And the last one is, I will make to you, Leo, is custom agent may require me to complete before the effective date to apply it. I think it's referred like before July 1st, like if the custom trade could make me to accomplish the obligation before the 1st of July.
Right. No, well, in this case, no. The answer would be no. The obligation becomes mandatory as of July 1st, 2016. At this point, it's pretty much in one more month. So you are not obligated to comply with this until that date. However, if you decide as an option and to start seeing it would work, if you can comply and everything, you can start issuing them. However, it is only an option. It is not something that becomes mandatory until July 1st, or in case there is an extension, you could apply that extension later on.
Yeah, we are almost there. So the companies have to worry about this, like to begin to work and how we will accomplish this new requirement, because it's just less than 1 month.
Great. So, well, we have other questions. Unfortunately, due to the lack of time, we have reached to the end of our presentation to the time. We will definitely, you can be sure that we will answer them all by email. At the end, we would like to summarize all the questions and publish it on our website, or to see how we can provide you the whole list of Q&A so you can have it available and can. So on behalf of my colleague Jose, myself, we would like to thank you very much for the time that you made for this presentation. We really hope that the information that we provided you has been helpful for you, and later on, if you have some other questions or comments, feel free to let us know. We will be glad to help.
Thank you very much.